Hi, I'm Rocky Lalavani, financial coach from Richer Soul. If you haven't had a chance to listen to video 1 about why you need to create your balance sheet, you may want to go back and listen. So today we're going to focus on the balance sheet, and you can download a sample balance sheet. It's actually the same one that we're going to be using at bit.do/balance-sheet. Go ahead and do that, and then we'll get started. For this exercise, it's okay to guess at values you don't exactly know, like the value of your house. It's better to guess low than to guess high. Also remember, for many assets, there are sales costs and also taxes on capital gains, and that's why guessing low is better. As I mentioned in the first video, we are not going to count all your stuff on your balance sheet. Things that you consume and use up are not going to help towards financial freedom. So your TV, iPhone X, or even your jewelry and other household goods are not counted. You don't even need to put down the value of your car. Let's start with simple things first. How much cash do you have? I'm not concerned with your wallet or piggy bank, but in the bank, savings accounts, checking accounts, money markets, CDs, and similar. They all go here in the top left. You can add them up and put them in as a single line item. If you're not sure just where to put them, pick a line. It's more important that we get the numbers down. Remember to just round out numbers in all these sections. You don't have to fuss over pennies or even small dollar amounts. So if you've got an emergency fund maybe and some cash, $1,500, we'll put that in. Savings account, which has got $2,500. Checking account with this month's bills, it's got $900. You may have a certificate of deposit, a money market, something along those lines. If you do, go ahead and put those amounts in. Next up are your brokerage accounts, and we'll put them in this next section. These are after-tax accounts, so this is not where we'll put our 401k stuff or retirement plans. So if you own a few stocks, you can put down the value of the stocks here. And you may have some bonds or some mutual funds. If you have mutual funds, go ahead and put them in here. Any ETFs, you can put them in there, and it will total up your total for your brokerage accounts. Also, if you have any company stock from your employer, you could add that into the stock amount as well and put it into that first block. Remember, at this point, we're just getting the big picture. So you're not looking for what's in each individual account. You just want a total from all your different places. Retirement accounts are next. This would be your 401k, any IRAs. If you have maybe a cash balance pension plan, you can put those all right here. And if you also have some profit sharing with a company or something along those lines, again, the pension is the cash balance pension plan. And any other accounts that you might have towards retirement, you can put them in this section. Next up is your real estate. So we're looking at your personal home, a vacation home, any rental properties that you may own. Don't worry about the loan values. That's on the other side of the page. And if you don't know the exact amount, just give yourself a good guess. And remember, it's always better to guess low than it is to guess high. Next up, we're going to look at everything else. If you'd like to track the value of your car because you have a loan against it, you can do that. If you own a business, you can put the business value here. If you have loans out, friends or family, if you have life insurance that has cash value, it goes here. So term life would not go in here. The death benefit, we're not looking at death benefit. We're looking at the actual cash value of the insurance plan. Any gold or silver coins, any other high value assets. Again, we don't want to put all your stuff in here that's part of your house and all that kind of junk, mainly because those things aren't helping you to build wealth over time. And then at the bottom, you will see a total for our assets. So in this case, it's $374,900. And the majority of that, of course, is our home. Now we're going to move to the other side of the balance sheet, and this is the liability side of the balance sheet. The top part is basically your short-term debt, like credit cards. In other words, if you have an outstanding balance every month, your vehicle loans, any medical debt you may have, a home equity loan, or anything else that you owe that's more shorter term. So in this case, we might have $2,500 in credit cards. We may have a $12,500 vehicle loan, and we have nothing else that is outstanding and payable. Now we're going to scroll down to long-term debt. So here is where we would put in our mortgage. And if we had rental homes and there were real estate loans, if there were any business loans, and then if you have any student debt from college, you could put that in here. And then in this last section, we could put any other debt. So let's say you bought some furniture and it was interest-free and you still owe some money on it. You could put that into here, or any other debts that you owe that we haven't captured somewhere else. If you use the Excel sheet and you actually did it online, then it will run all the calculations for you. If you did it by hand, you're going to have to go back and total everything up if you printed the sheet out. So in this case, you can see that we have total assets, $374,900. Total liabilities, $241,000, and it brings them over here, giving us a net worth of $133,900. So, what do you think about your result? Remember, it's not your personal net worth as a human being, but your financial net worth. Now that you know, you can change it by taking steps to correct it or to increase your net worth. The next video, Creating Your Cash Flow Statement, will show you how to grow your net worth. If you already know your financial freedom number, you can put this number into a retirement calculator to see how it will grow over time and how much you need to add every month to hit your goals. You can Google a ton of retirement calculators out there. I'm just going to play around with Vanguards. So in this case, pick your age. Here, if you're 32 years old, and you put in your income, and it's just a slider bar, so we're going to slide over to get to our income. And then how much you save every month as a percentage of your income. Oh, this is annually, not monthly. So I'm going to say that we save 15% of our income. And if you remember, we had that number that we already had for our net worth, so we can put that in here, the $133,000. We'll just round it down. And then it's saying I'll need 85% of my current income in retirement. And that may be true, not true. A lot of that depends on your savings rate. So the higher your savings rate, the less you will actually need in retirement income. We'll talk about that at a later time. Your annual rate of return, and we're going to guess at this because you don't know what the future holds, but I think 7.5% is probably a good amount. And I'm not going to put in for Social Security or pension. But as you see, it shows what you have based on your current savings rate, and then it's calculating what you need based on this 85%. So if you can spend a little bit less, say you're going to retire and you say, you know what, I think I can live on 70% of my income, well, then you see that we're pretty much on track with our savings goal to hit what we need for retirement. And that's always cool. Again, play around with these numbers and see how things make a difference. In other words, if you can get a higher rate of return, 8.5%, you see that dramatically improves your plan. Again, you don't want to take excessive risk. And the one thing that's not here is inflation. So you'll have to figure that out as well. All right, in the next video, we're going to take a look at your cash flow Thanks for listening. If you have any questions, please email me, rocky@richersoul.com. Be happy to help.